Hello, guys. This is Paul McMillan II, and welcome to another price action concepts backtest session. So it's July 19, 2025, and it's on a Saturday afternoon, around 2:04 p.m. And I just want to go over some backtesting sessions. Um, I think I found a way to actually help us to actually get in on the major institutional moves using our Lux Algo price concepts indicator, along with extra confirmations from Vinny's cheat code confirmation indicator as well. So basically, I'm going to be marking up liquidity manually for the 1 hour, and then go to the 5 minute and basically use both indicators to basically nail down where more likely price will go. Then from there, manually looking for liquidity sweeps, and then our volume institutional candle to get in. Okay. So let me go ahead and start the replay tool, and then we'll get started. We're going to get started here. Okay. So we're going to go to current price. We're going to mark up liquidity. So as we can see here, in order to really find liquidity, we want to see wicks that have wicks or price action that has wiped out previous lows. You see that this was the previous low, and this low wiped this low out. So it's easy to see that there's liquidity in this area. So let's mark this up here. We're going to take our trend line, mark this area. And since price is outside, we're going to call it external liquidity. So this is going to be our 1 hour sell side liquidity on the external side, okay? Because it's at the very bottom. We also see that this high here wiped out this previous high. So it looks like there's liquidity up here. So we're going to mark this up. This is going to be our buy side liquidity on the external side. Right. Now, we also see that there was equal highs here, a lot of wicks. So more likely there's liquidity running up here. So we could then draw an internal, and this is the internal liquidity right here. So buy side internal, then looks like there's some liquidity here. The price bounces and really bounced there. So we can just say that there's some internal liquidity right here. And we'll just leave it at that. That's on the sell side internal. Okay. So that's what I see here. Okay. Now what we're going to do is we're going to go to the 5 minute time frame to see how it is. Okay. So we can see that it looks pretty good. So we drew that correctly because price hit external liquidity very well here, went up, and then really tested this external liquidity and this internal liquidity and pushed up. And then we have internal liquidity here. It looks like price is respecting, and then price did some liquidity grab up here as well. So that's correct. So you pretty much did, we marked this up as closely as possible. So now, what we want to ask ourselves is, where's price laying at now? Is it laying close to external liquidity, or is it still in between external? Well, the way we're going to figure that out is by turning on our price action concepts indicator, and then we're going to turn on our Vinny's cheat code indicator. Now, anytime when price is sticking out of the Bollinger Band here, it is a signal that price is going to do a major reversal. Notice it did that here. And it tested this external liquidity, did a huge reverse, and it broke above our change of character and started to go bullish. So price is not near external liquidity. In fact, it already has made its reversal. So it lets us know that we're possibly in a bullish trend. Now, the way to confirm that is we want to look at areas where we see our change of character. We had a change of character here, so price pushed above that, so it let us know that it was going bullish. But we also had another change of character here, so that's what we want to mark up. So what we're going to do is just turn off Vinny's indicator, because we're not near external liquidity. I use Vinny's indicator to figure out if price is near external liquidity and has it touched outside the bands. And if it's touched outside the band, does it match the liquidity that we've drawn from the 1 hour? Okay. currently price is in internal liquidity. It's close to this internal liquidity here, okay? And it's broken this change of character. So what I'm going to do is put a change of character as a pullback here. This is going to be a 5-minute pullback or change of character. Notice we got price strength here too. So as we can see, when price jumped, sticked out of the Bollinger Band and hit this liquidity, it rated this low. So this is the only low that the banks are probably going to be interested in getting. But they may get the liquidity open here, which I can see that because we have some external liquidity. And then ultimately, they may actually get all the way up here as well, because this is still open. They mitigated half of this here and went down, but they haven't wiped out this open. Okay. So then in this situation, since prices broke above the change of character and we got price strength, then I'm going to buy it up at this point, okay? And I'm probably going to buy it up maybe to this point or maybe up to here for it to wipe out this low, okay? Now, what we're going to do is test this because price has already mitigated half of these fair value gaps. So they're probably not going to necessarily get this yet, but it's a possibility they could come down and get this before going up. But they already hit this area. So it's a possibility they might come down and test this and go up further or go down. So let's see what happens. Now, the rule of thumb is we take 2 trades. If we take this trade and price happens to go down, then we lose that trade. We take another one, we scale it all the way down to here. But if we lose both trades, then we don't trade to the next day. But we ideally take 2 trades. If one loses, we take the second one. If both losers, we jump out of the market for the day. If the first one wins, we're done for the day, or we can look for another trade. Me personally, if I win the first trade, I'm done for the day. So let's see what price actually does here. So we're going to take the replay tool and play it out. So price might be coming down to mitigate this area and maybe go up, or we might actually be going bearish because price broke this change of character. So really in reality, had we taken this trade, we probably would have lost it, but that's fine. So this is a scenario where we're probably going to take the trade down. So let's see if price takes it all the way down to here. Because now it looks like the bears are taking control and we have price strength. All right, so it went down. Probably going to come back up and test this again. We probably would have won now with this move here, but that's fine. They're testing that change of character. Let's see if it goes above. Okay, it's closing above. Let's see if it goes above here. So first things first, we could have taken this sell, so this sell was fine. We actually, so we had taken it from here and all the way down to here. So that would have been, it's probably about maybe 6-7 pips, which if you trade 5 micros, that might be $150 to $200 a day. And that's fine. So now let's erase this. And so then, price goes above this change of character. So now we're going to do this for sure. Now, this is where we would probably take it up to here. Pretty much we want to, let's see, yeah, we pretty much want to trade from there all the way up to there. And then we're probably going to get a second retest here. And pretty much we want our liquidity up here, liquidity sweep here, right? So that was our target. So we would have won that trade. Now from here, we know that price is bullish. It may bring price all the way up to here, but we know that eventually we're going to wipe out all this area here because this hasn't been, all this hasn't been wiped out yet. So since we got price strength here, I'll be looking for them to wipe this liquidity and jump out here before doing a major reversal. Now, and look what's going on. Well, they pretty much got it up to here. So now what I would do is I would ask myself and say, okay, the outside external liquidity, what does a cheat code say? Okay, so we're not necessarily outside the Bollinger Band yet. Now, price did wipe out liquidity up to here. But usually when we get a major reversal, price is sticking out of the Bollinger Band. So then I would be looking for price to really stick out to here on the Bollinger Band before we do a major reversal all the way back down to here. Now, let's see if that happens, and then there'll be another example and then wrap it up. Yeah, see, they're scared. It's like they're scared, buying it up. Yeah. Not sticking out of the Bollinger Band yet, but we're still bullish, so we would have more bullish opportunities. But now, price started to stick out of the Bollinger Band a little bit here. This called a major reversal. So this is an example here. You see the Bollinger Band here, and price wiped out this previous high, created a major reversal. So then at this point, I really had my entry here, but this would have been good. So we would have got it for a very, very nice target here. Okay. But it did jump out of the Bollinger Band. Okay. Now price is sticking out of the Bollinger Band here. Now, so we have external liquidity here. Now price, they could wipe it out and come all the way down to here. So, but we have strength here, so we could have traded this down to the internal liquidity. So we could have traded it all the way down to here, and that's fine, because this is probably our new external liquidity down here. So yeah, I think the question about drop the break down. I mean, we came close. So it did test and went down, but then it stuck out the Bollinger Band here. So it didn't get this far, even though eventually that did it, but it stuck out the Bollinger Band, major reversal up to here. Okay. So then they're probably going to test this area and maybe send it all the way down to here before going back up again. Or they might just go straight up. But let's see. Yep. And so now this has been all rated. Okay. So now we're definitely outside of the Bollinger Band here. We could have taken these trades to the sell and jumped out of here, but now we're looking for some major reversal here. They might even get all the way down to here. And this is when we know we can prepare for a major reversal after the liquidity sweep. Okay. Now we're going to do one more example, and then we're going to wrap this up. Okay, so here's our last example. We want to mark this up here. Okay, we're looking at current price, so let's jump in. So you can see that there's wicks. It looks like this is wiping out the previous low here. And then this is wiping out the previous high. So this is probably external liquidity on the buy side, sell side liquidity on the bottom. So let's actually mark that up there. And that's all we're going to pretty much mark up on this one, because you don't want to make them too close together in this example. This is one of our sell side liquidity statement. But we're going to mark it here. Actually, it might be able to you might actually be able to get away with drawing here. See, on this good time. The buy side liquidity coming on. Yeah, probably got it. You know, I'm big price there, so this is the sound. Right. Now we're going to go to the 5-minute. Yeah, so we probably made this a little too close, so we'll just take these out. And we'll just stick with external and internal. If they're close enough, they wouldn't get an idea of what price is going. So in this example, we were on point, but price did wipe this out technically. The price respected this internal liquidity here. Let me move this to the left so you can see the labeling. Right. Now we're going to find out where exactly the price land at when it comes to external liquidity and internal. So price did reject this external liquidity, so it's not necessarily, current price is not necessarily at the external. Let's just double check. So the return on a price action concept indicating units. Okay. Now you see that the Bollinger Band really goes up to here. Price stuck out the Bollinger Band, and it looks like price is doing this reversal. It might be a major one, might not. But so we see that. So we see that price is inside the internal liquidity here. Okay. But now we're going to turn this off. Now the next thing we want to do is we're looking for really fair value gaps. Now there was a lot of consolidation here. So that means that a major reversal is in play because consolidation is basically liquidity that the institutions are going to want to come back to. Okay. Now we had a huge fair value gap here. It's been traded in. And now we got a couple of fair value gaps here, and we have a price of strength. Now it looks like price closed above this change of character. We're going to mark this up and name this a 5-minute pullback. And this is going to let us know who's in control. Currently, the bulls are in control. So if they retest is not respected, then more likely they're probably going to get all this open here that this created, and then maybe up to here. Now, if they close below the change of character and the bears take control, they're looking to wipe out liquidity all the way down in this area. Right. So in this case, I will take my long position. And this is the last wick here. So I will place my stop loss down here. And I will be looking to target this liquidity up here. I already hit half of this. Or come up to here. Now, here's the biggest thing. They may actually come up and retest this area. They continue down and hit this liquidity. So this may be our exit and this may be our entry at that. Okay. Now we'll just test it and see what happens. So we got a signal strength. So it's closing below this change of character. Now it's pushing up. Now it's closing down. So more likely they're probably going to want to get this open and go down to here. But then at this point, I probably will go ahead with a sell. Probably put it down here. Let me see where the Bollinger Band is. Bollinger Band is right here. So the price goes all the way down to here as well, out of that range, and then they do a major reversal up. Let's just see what price does. There we got some strength here. And then we pretty much hit our target at this point. So we hit our target here. So we are about into here and went all the way down here. That is about 19 pips. Let me do the math real quick just to be sure. And then do some tracks. 19 points times that by 5 micros, that would have been $950. Not bad, okay. But that would have been good. Now what we need to ask ourselves is, so price rated this liquidity. So is that external liquidity? How deep is it out of external liquidity? Well, sticking out the Bollinger Band quite a bit. And I might be ready to reverse all the way up to this point, and I might be ready to get more of it and then reverse up. But then at this point, I'm really looking for a deep liquidity sweep down here and then ride it all the way up to here, maybe up to here. Let's see if price ends up doing that. So yeah, we went up quite a bit, but it was a lot of consolidation. So they're probably going to still come back down and get this area. So, yeah, so they decided to come down a lot deeper. See that? Didn't get to it right away. They came a lot deeper, okay? Now, we could have taken a sell here before, because sometimes when we're looking for price to wipe out an area, they don't necessarily do it right away. You may get some bullish opportunities, you may get consolidation, you may get another sell opportunity before you get a major reversal. So it just depends on the situation. So we would have got another good sell opportunity here and a couple down the here. So now, when we look here, now price is really sticking out of the Bollinger Band. Question is, how deep are they going to go before they decide to reverse it up? So this is what I'm looking at now. Where's the next change of character? Girl looks down. I don't see it. Next change of character is really up here. But this is one touch, 1, 2. They may come back down some more. Now we got some liquidity here, so they may touch this even more. Maybe they just make us start on liquidity down here. And now we not. And it's sticking well. The Bollinger Band is right here. And it's matching the liquidity, so that's good as well. Now, you need to wait for it to stick out. Technically, a rating is there. I'm looking for it to go down even more. Yep. The rating is not last a little down here. You go to the city right up here. Now it's getting negative. They're probably going to get a whole bunch more, but eventually they're going to reverse it. And that's the reason why there's something that you want to look out for. Don't expect it to happen right away, but look out for. That's why we follow strength. Okay, you keep on following price strength until they tell us otherwise. But in this case, we keep on selling until price breaks above, until price gives us a clear indication that it's ready to go up. You notice so far we haven't really had a very strong fair value gap. I mean, this was an example, but sometimes it doesn't always go up right away. They still need to get more liquidity. That's the reason why we take 2 trades. We take a second trade if you leave the first one. And sometimes we're not always right away. We take it there back. Now, this might be a sign. Maybe. Yeah, there you go. If this was really the sign here, that's a sign of strength. We would have gone in here. And we pretty much really targeted this, which we're almost good. We have a major liquidity line right here. The price is dropping out of liquidity, so they probably not come back to test the fair value gap. Well, we're bearish again because price broke this change of character, right? And then you'll probably trade it down to get this target. But again, if we were going to get this area, they would have closed above and fixed it for the bid. Unless they're testing this fair value gap. So actually I take that back. I didn't see that. So this wasn't mitigated yet. They didn't mitigate half of this yet. So this might be an indication to actually buy all the way up to here. We did have a change of pair. Okay, let's see. Yeah. And we would have talked. Okay. So even though they closed below this change of character, but this hasn't been mitigated yet. So in that situation, that's why I did what it did. But yeah, that's what happened there. So, but that's just an example of how we trade this strategy, guys. I'll probably do another backtesting session tomorrow evening. But that's it for today. Hope you guys enjoyed it. See you guys soon. Bye.